Okay, welcome everyone. I'm going to keep this stock market technical analysis video relatively short. I do want to get one out today. We have the Fed day tomorrow, but I'm not feeling that great. I caught some cold or something on this weekend. So, going to keep it short, guys. But I do want to get something out. And we have the Fed coming out tomorrow at 11 o'clock Pacific time. And as of right now, there's been some talks about them hiking 3/4 of a percentage point on their Fed funds rate. So that's kind of priced in, I think, at this point. So it really is going to come down to how do they behave with with their forward guidance. That's really what the market's going to be looking for, because we've priced in a 3/4 point hike, and if we get that hike and then they continue to talk really hawkish, then we're probably going to see some more selling, and that's what I think is going to happen. I think I don't think they're going to back off yet on the interest rate hikes. But I do think this is probably their last hike, at least for a little while. So likely what they'll do is they're going to hike, they're going to talk hawkish, the market will continue to sell down. And then over the next couple months, basically, you'll hear them really start to back off on the interest rate talk, and then likely, maybe taper down that to a 1/4 point hike, or take a pause or a break or something like that. Okay, so on triple Qs, really what I'm looking for is a couple key levels. We've got some support right here at about 260. Where do I have it marked at? It's about 267. Well, we could probably move that up just slightly. Yeah, right in there, about 268.05. And that's kind of the near-term support. I think since we're so close, we're very likely going to hit that probably tomorrow after the Fed. Maybe even before the Fed, but I think we will hit that. And then we have the pre-COVID highs right here at 238.07. Okay, so that is, at least in my book, the final target zone where the market's likely going to stop moving lower, and we'll probably get a pretty substantial bear market rally down there. This is really the area I've kind of pointed out for a while, and that would be the final target. So maybe we get there after the Fed. It's not going to be a one-day thing, but it could get down there pretty quickly if, maybe to close out the week. So we'll just have to watch that. I'd likely be looking at, going long down there, depending on what the charts look like. But that's kind of what I got for levels of the triple Qs. Lower prices. Keep in mind, I'm hearing a lot of bearish talk now, so everybody's now in the bear camp. I've got a lot of my subscribers who are all bearish. A lot of the TV people, they're all bearish, and basically everybody's just bearish and thinks the market's going to continue to sell down. So usually when I start to see that, that tells me that, okay, we're coming close to the end of the bear move. I haven't seen any panic selling yet, though. So if I look at the VIX, and I'm basically, I have a small position in the VXX, but here's the VIX. We haven't seen a spike in the VIX. So if we can get that spike, pop above this 38.41 area, kind of pop like that, that's probably going to be the sign that I would need to tell me that, okay, this sell-off is likely finished. So if we get that move down to those pre-COVID highs in the triple Qs, you're more than likely going to see the VIX spike, and we're probably going to be coming to the end of this near-term bearish move. And then we'll likely start a bear market rally, something maybe a little more substantial. I was looking for the rally that we got over the last couple of weeks, only lasted a few days, and I was looking for something that lasts weeks to months. So I'm still kind of looking for that. And so yeah, those are levels that we're looking for. Gold, gold bullion still hanging in there. They're selling it down a little bit before the Fed, but again, any moves that take place right before the Fed meeting, and this is a big one, you want to take with a grain of salt. So I'm kind of just ignoring the price action in the gold and gold miners today, just because it's right before the Fed. It's an interest rate meeting. It's likely going to move the markets, including gold. So I don't see anything that tells me it's time to get out. If I look at GLD here, you can see GLD, the long-term trend line started in 2018, and we're just coming down to that trend line. So lots of support down in this area. So maybe we spike down after the Fed and then it recovers. I don't exactly know, but I do know that we're coming into really good support. Also, this was the isometrical triangle support. So you can see this was resistance all through here. We had the breakout, and we're coming in for, we did a back test one, and it looks like we're coming in for a second back test. Okay. In general, still looks bullish to me. I think they might dip it down and make a new divergent low, and have bullish divergence. So maybe it'll look something like this. If they continue just a little bit lower in price, we'll have bullish divergence, and we'll be at major support, and it is, should be the end of the selling in gold and the gold miners. These oil stocks look to me like they got a sell signal yesterday. So here's Chevron CVX. This is a big player in the oil space, and you can see we had this bearish rising wedge pattern. This bearish rising wedge came with negative divergence here. So nice clean divergence on both momentum indicators. And we got a sell signal yesterday. There's your sell signal. Today, it looks like they ran it up for a back test and it's getting rejected. So that's a sell signal all day long in my book. I think the oil stocks are probably going to be a sell here. And then I'm looking at the oil futures, and on the hourly, we've got a little bit of, this is a pivot zone that they've been trading around 120.50. You can see that we basically kind of held here, rejected there, popped above it. It was support, resistance, support, or just chopping through it. But you can see today we recently popped up, made a new high. That was a divergent high. Let me double check. Yep, right there. See negative divergence on the both momentum indicators. So this new high was with negative divergence, has a high probability of failing. So I think we've probably seen the short-term top in oil. Just seeing some of these oil stocks. XOM, that one doesn't have a sell signal yet, but some of them do, some of them don't. So we'll continue to watch these, but yeah, I'm going to start taking short positions on some of these. And keep an eye on the commodities trade, because here's DBA. This is a basket of commodities. Here's your uptrend line on the daily chart. We have negative divergence. It's been building for quite a while. And today, you can see starting to get that sell signal where it's breaking down. Now, it's not super impulsive yet. Ideally, you'd like to see it a bigger red candle, but it is breaking down. So if they can continue to build on this sell-off here into the close, or maybe after tomorrow, then you're going to have a sell signal here in the commodities trade, which should basically start to ease back the inflation trade. At least the readings, the inflation trade will start to ease back, and once that starts to ease back, then the Fed's likely going to ease back on their rate hikes. And you guys can see XLV here is continuing to sell down. Looking at the daily chart here, more selling pressure. So in essence, the bull market has been broken. We it's obviously, it's obvious now to all that we're no longer in a bull market, but even these defensive sectors are getting sold down. So there's really no strength. The last holdout of strength is energy stocks, and I think those are kind of next up to get sold down. So that's all I have for today, guys. I'm going to go rest up, and I will catch you guys tomorrow.